Good morning, everybody. This is Tyler from the Order Flow Dojo, and today we're going to do a trade review of my session on March 7th, 2025. It was a pretty good session. I took 4 trades in total, the first of which was an inflection setup, in which I was expecting sellers to initiate us lower from a key inflection point, and based on what I was seeing from the higher time frame auction and the order flow, I figured if they failed here, we would see a significant rally. So I was able to actually lose on my short, but make more than those losses back flipping long at my stop loss. This trade went for 12 points at its maximum, though I trimmed it for only +4 and +8, and then let my final runners get stopped out for -6. If we take a closer look at this first trade, you can see that I started my day with a plan, as I do every day. I noted that the market was at a big inflection point that we could expect a large move from, and I was looking to side mostly with the sellers based on the bearish activity we had observed in the weeks prior. 15 minutes into the session, I found some order flow that I liked, and I joined the offer with an expectation of rotating lower and the humility to flip long if my bias was proved wrong. This ended up working well in my favor, and I was able to capture a pretty good return. Some time after I exited my position, I notated that it would actually have been a pretty good idea in hindsight to flip short, though I did not do so. If you look here on the footprint screenshot, you can see there was a significant red delta that came in with a low volume gap beneath it. This is what inspired me to take my position at the opening of this following candle at 57.58, and I placed my stop loss at 57.62 with plans to flip long above the prior candle high. Beyond just what I was seeing in the futures order flow, I was also paying attention to the SPX options order flow via an algorithm that we utilize in my Discord. The algorithm was suggesting that there was significant options positioning at ES 5800 and ES 5830. This led me to believe that if my short bias was proven wrong, we could expect some significant upside. This activity here, rejecting the low volume area at about 57.60, led me to believe that we should see seller initiation. However, it wasn't very long before buyers overran this idea, and I was quickly stopped out at 62, and my buy stop was triggered at 64, flipping me long into a new high of day. I trimmed most of the position at 57.70 to cover the first stop out, and held some runners in hopes of achieving a squeeze up to the 57.80 and perhaps even 58.30 levels that we notated from the Danielle algo. The second trade I took was expressed via SPY calls, as I was looking to capture some convexity if we actually reach this peak of 58.30 like our options order flow algorithm was suggesting we could. My first idea was to actually play this as a strangle, which is a multi-directional bet looking to capture high volatility in either direction, but my good friend Casey noted that based on what we were seeing from the Danielle algo, we should just be expecting upside. So I forgot the idea to capture downside and just bought the 575 SPY call and shorted the 580 SPY call. Given that this is a $5 wide SPY call spread, the maximum value that it can go to is $5. I filled the position for 69 cents and covered it shortly thereafter for a 30% gain. The upside pop here came a lot quicker than I was expecting and in a way that I didn't really like, so I just flattened the position and was intent on leaving the market be. About 90 minutes later, I found some more order flow patterns that were indicative of a good low, and so I filled this SPY call position again, this time with hopes of achieving at least 57.80 as notated from Danielle earlier, and maybe even 58.30. You can see here on the footprint chart that the low gave out with 9 ticks of exhaustion into 11 ticks of exhaustion, followed by an absorption and taper back up. This was exactly the action I was looking for, and I became very confident in my setup. You can see the chart of the actual call spread value here. I filled for an average of 50 cents, giving me the potential to make 10 times my risk. And I began trimming most of my position at 100% and 200% gains. At this point, I was very satisfied with the trade and decided to just hold a few runners in hopes of us reaching the final Danielle targets which ultimately into end of day were not realized, and my calls expired in the money for a 50% gain. It saw an unrealized profit of about 500% here, but as I noted in Discord, my intention was to hold these final runners for max profit or expiry, and they did end up expiring in the money for 75 cents, netting me a final gain of 50% on the runners. Given the fact that I was sitting on some good profit for the day, I decided to risk a little bit of it for a SPY strangle in case some kind of news dropped and sent the market flying in either direction. This trade ended up expiring worthless. If you're interested in learning more about how we utilize futures and options order flow to generate these equity trade ideas, you can join us in TradeVault. It's a premium Discord server full of serious traders. Our mission is to make access to these institutional grade order flow tools accessible for everyone, and we're offering it now for a very reasonable price. Thanks for watching, everybody. Hope to see you in Discord soon. See ya.